Today is Monday, November 6th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Alan, last week, non-farm payrolls in October increased 261,000, which was well below economists' expectations for an increase of 310,000 jobs. In light of this weaker than anticipated report, is the Fed still on track to hike its Fed funds rate in December?
Absolutely. There's a better than a 98% chance that the Fed will raise rates at the December 13th meeting. However, we do believe that the Fed will, I believe that the Fed will not be raising rates 3 to 4 times next year. Most likely they will only raise, I would have to say maybe only 2 times, but the Fed is on track to raise rates, and I also think that it'll be a rather slow progression of rate increases.
Was it a surprise that last Thursday President Trump nominated Fed Governor Jay Powell to be the next Fed chair, and how do you think he differs from the current chair, Janet Yellen?
There appears to be very little difference, other than he is not as controversial as Yellen had been in the past as far as her relationship with President Trump. He is an easy money governor for the most part, so he is a logical choice to be the next Fed chair.
And finally, Alan, the stock market continues to steadily advance. What are your current thoughts on the market as we move into the last couple months of 2017? Do you feel we'll see some profit taking prior to year's end?
I think there's always some profit taking from time to time, but I don't think it will be anything severe. Any breaks should be used as a buying opportunity. And in fact, just today we saw the major indices advancing to some new highs. So I believe that this bull market will remain with us for the balance of this year, and I also think it will probably continue well into 2018.
Steve, let's talk grains. Soybean futures are near key support. Which way do you think the market will go?
We have conflicting news. I mean, I think that we backed off a little bit from the highs in thoughts that maybe China might slow their buying of beans from the United States. But at the same time, this week the USDA has a report they might actually lower the U.S. soybean crop. The last 30% of the harvest yields are lower than some people had anticipated. I guess if you look at the fundamentals and plug in normal weather in South America, you would think prices are going lower. The average analyst trade guess of the range of January beans is between 970 and 1015, so we're right in the middle of that range right now.
Steve, this morning on the radio, WGN, I heard that in Illinois we're about 17% behind in harvest than we were last year. That there's been some relaxation of weight limits on trucks, things like that. Will that have any impact whatsoever on corn and where we're at currently?
I don't really think so. I think that, first of all, farmers initially wanted to use the fields as like a place of storage, and they didn't want to rush into it. They cut their beans first, and so that might cause a little bit of yield reduction if it's a windy or rainy type time frame. But for northern Illinois, yields are coming out record high, and this is just astonishing. And farmers are kind of patting themselves on the back for growing such a crop without a lot of rain. But in general, the farmer has a record amount of corn to sell from last year and this year, and so the fact that the harvest is late probably won't make a big deal, especially since the fact our export demand is so slow right now.
And farmers may be holding a record amount of unsold corn. What are their options right now?
Well, there's several options. Number one, if you have to sell the grain and maybe go in and sell a call, or later on buy a call in February at the February lows to replace that inventory. If you want to store it, you maybe sell a call to pay for the storage and wait down the road. I think that people are beginning to look at 3 issues that might help corn 6 months from now. Number one, the Brazilians might plant less acres. They may grow a smaller crop, which would be less competitive. Number two, the Chinese are changing some of their policy, which could increase their corn demand. And then number three, next year we'll see what kind of weather we have, but we may not have as good a weather next year as we had this year.
What about wheat, Steve? Trading sideways in a fairly tight range. Which way will that break out?
I think it's just sideways. I mean, I think the funds have close to a record short position in wheat, which makes it vulnerable for bounces. But there's too much wheat in the world, and we're not really hearing any weather issues for 2018 that's going to cause a lower crop or any rally in prices.
South American crops, what's the latest there?
Weather's improving. I mean, it started out with too wet in Argentina and southern Brazil and too dry in northern Brazil. That's flip-flopped, and so now you're getting rains in the dry areas of Brazil and it's drying out in Argentina. So right now conditions are pretty favorable. All their plantings are delayed, and so the big question mark is, will they get all their corn acres planted that they intend to get planted? But other than that, their conditions have improved.
Finally, Steve, there's been some talk about China and the announcement of a new infrastructure and ethanol policy. What does that mean for commodities, particularly corn?
One of the three things that I think could be positive to commodities down the road is China. I mean, they announced trillions of dollars to be spending on infrastructure. So they could have bigger increase for iron ore, for coal, for energy, and for copper. And so all those markets have to be sensitive to the potential of that increased demand. Now again, it's just a written policy. It doesn't mean they'll implement it or how long it's going to take to implement it, but that's very positive for those particular commodities. Due to smog, due to big corn record stocks, they want to put 10% blend of ethanol in their gas by 2020. So if they did that, it would be 40 million tons more corn demand that year than there is now. So right now they're growing a 215 million ton crop, and they're using 240. If they use 280, they'll draw those stocks down pretty quick. And so the left hand has to realize what the right hand is doing, in that they're going to use up all these stocks very quickly if they enact this policy, and they have to have a plan to replace those stocks down the road.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.